Welcome everyone to Talking with a Professional. Today I'm here with Cameron Stevenson, a Director of Acumen Accounting, and with the end of financial year fast approaching, we thought it'd be fitting to talk about investment properties and tax returns and tax time. So Cameron, the first question, when it comes to owning an investment property, what are the types of things you need to see from an investor for your tax return and the type of deductions they can make?
Yeah, sure. Look, obviously, when you're doing your tax return, if you've got an investment property, you obviously need to include the rent that property earns, but then you can claim all the costs against that property. So typically most people have got a mortgage on that property, so the interest component of their loan repayments is deductible. All your council rates, repairs and maintenance, insurance, those sort of things are deductible. So pretty much anything that you have to spend in relation to maintaining that property is deductible. The big one that a lot of people don't understand is depreciation.
Yeah.
So say you put an air conditioning unit in the property, you can claim that cost over a number of years. You can't claim it in one lot, in one big sum, but you can claim that over a number of years. Also, if you've just purchased the property, if you've just built the property or purchased a brand new property, you can depreciate all the cost of the fixtures and fittings in there. So your floor coverings, your electrical goods, all that sort of thing can be depreciated, as well as the original structure costs. So you need to get a quantity surveyor report in order to claim all those things.
Which can be claimed as well.
That's right, yeah, absolutely. So, and it's also available for existing properties as well. You can't claim the cost of the fixtures and fittings in those properties, but if they've had, if they were built, within the last 40 years or so, then you can still claim some construction costs, or if it's had significant renovations as well. So.
And when it comes to putting in that tax return, what type of documents do you need to see from the investor, and how long do they need to keep those for?
Yeah, sure. Look, most investors these days use a real estate agent to rent that property out for them, and your agents are really good at preparing an annual statement at the end of the year. So if we receive that annual statement, we can get from there the total rent that the property's earned, all the fees that you've charged in terms of managing that property, and if you've paid for the repairs and maintenance on the property out of the rent before giving the balance to the owners, then those sort of costs are on there as well. So that's a great place to start, is that annual rental statement from your agent. Then you're going to need your council rates, insurance, and any other costs that you paid out of pocket, and of course those loan statements.
Yeah.
Generally speaking, from a record keeping point of view, you need to keep those for 5 years for income tax purposes.
Yeah, cool. And obviously over the last few years we've seen a large growth in the market. So what are some things investors should know around capital gains, and if they were to sell, realising those gains?
Yeah, sure. Look, capital gains tax is a pretty complicated issue. On a simple look at it, you say, okay, if I bought a property for $400,000 and sell it for $500,000, then I've made a $100,000 profit. But that's not necessarily the figure that you get taxed on. So there can be discounts involved if you've held it for more than 12 months. You've also got to take into account commission on the sale, legal fees on the purchase and the sale, stamp duty. Again, if you've claimed depreciation over the life of the property, then that generally reduces the original cost that you paid for it.
Yeah.
And then also, if you've lived in the property at some point, then you might get a partial or full main residence exemption. So in some cases, you might pay no tax at all.
Yeah, cool. And obviously there's a lot of changes happening to legislation in all areas. What are some changes that you're seeing in capital gains and negative gearing?
Yeah, look, there's no changes just yet, but if we think back not that long ago to the 2019 election, Bill Shorten took a fairly aggressive policy to the election, and that involved reducing negative gearing and capital gains tax discounts for investors.
Yeah.
We've got a budget coming very soon. At the moment, there's some, rumours that maybe those things will come back. But at the end of the day, I guess there needs to be some incentive for investors or landlords to invest in property. Without landlords, there are no rental properties. So removing those sort of concessions in isolation will only worsen the rental crisis, in my opinion, because more and more landlords will say, well, that's it, I'm out.
Put their money elsewhere.
That's right, absolutely.
Yeah, cool. And obviously, a lot of people own properties in the super funds. What are some things that you think people should know if they're looking at going down that avenue?
Yeah, look, it's when the rules first opened up to allow the self-managed super funds to purchase properties, that was very popular. Most of the banks got on board and offered those products. What we're seeing now is that there's fewer banks offering those loans to self-managed super funds because they do need to be on what we call limited recourse terms.
Yeah.
So that's probably meant that the products available or the loans that you can get to purchase those properties have been a little bit more expensive than what you could get as a normal investor in your own name. That doesn't mean that it's not something you should do.
Yeah.
Certainly, for the right circumstances, it works well. Particularly, if you're buying that and it's an asset you want to hold in retirement, it's a great way to be able to say, well, okay, I'll purchase it in the super fund. It'll sit there. My contributions will help pay that loan off over the next 30 years.
Yeah.
And when I go to retire, that asset will be owned outright, and I can either live on the rent or sell it and realise the cash. So
Cool. Awesome. So I think that pretty much covers everything. If someone wants to talk to you or your office, whereabouts can they find your details?
Yeah, sure. Look, if you Google Acumen Accounting, you'll find us there. Our office is in Hume Street in Toowoomba.
Yeah.
And you can call us on 4633 800.
Awesome. No worries. Well, thank you very much, and look forward to seeing you next time.
Thanks very much, Sean.